back. We continue to follow the collapse of FTX.
We have some breaking news on the FTX crypto story just crossing that FTX founder Sam Bankman-Fried has been hit with a class action lawsuit.
What it means for market liquidity. Sam Bankman-Fried's Alameda Research is closing, as we know. FTX filed for bankruptcy, and Alameda was one of the biggest market makers in this space.
Guy, John Ray, who did the Enron stuff. Never in my career have I ever seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here.
What happened at FTX, I think, is again just a harbinger of things to come.
John Carney, SBF, is this guy going to jail? What's going to happen to him?
A couple weeks ago now, the world's largest crypto exchange, FTX, collapsed due to borderline fraudulent management and investment practices. The collapse was the largest example of such collapse, albeit just one of many instances of fraud in the crypto community.
The fallout from FTX will take months, if not years, to resolve. Lawyers have to decide whether the exchange can operate. And then there's the issue of all the customers who just want their money back.
I think it is very important that everybody with investments, even non-crypto investments, understands what happened to this company. And I will do my best to give you everything that you need to know about this collapse so far, because it is rapidly evolving and circumstances may have changed significantly when you watch this video. Investors will lose billions in this collapse, and that by itself is terrible. But I think it highlights a much larger issue, which is the personal finance influencers that are directly responsible for directing hundreds of thousands of their viewers to make investments that will harm their long-term financial well-being.
There's Meet Kevin, Graham Stephan, Andre Zick, Jeremy from Financial Education. All these guys got paid millions by FTX.
I am not just talking about FTX either. Yeah, sure, this is one incident, and maybe nobody could have seen it coming. But it's just the tip of the iceberg, and people are going to keep losing their money because of bad advice they received on the internet. So it's time that people like Graham Stephan, Andre Zick, Meet Kevin, and the dozens of other influencers in the personal finance space recognize the harm that they could be doing to their audience. I don't want to start YouTube beef or anything here. I think these guys could do a lot of good for their audience if they reverse some of the really bad practices they have started making in recent months. Bad practices that are probably going to blow up in their face in more ways than just this FTX disaster.
Their reputations have just been going down the toilet. People who promoted absolute garbage companies like FTX US and BlockFi for millions of dollars, today we're finally seeing the results, as both of those companies are basically bankrupt.
So it's time to learn how money works to understand what went wrong with FTX and understand how you can personally tell when someone you think you can trust on the internet is telling you to do something that is not in your best interest. A big part of understanding the difference between a scam and a legit product is being able to think critically, and today's sponsor, Brilliant, can help you do that. Brilliant is a learning platform helping you develop your knowledge in math, science, statistics, and fun areas like finance and logic. Brilliant offers an interactive way to learn. It doesn't just give you a lesson and expect you to retain what it told you. It regularly tests your knowledge to help you actually learn the subject. If you don't understand a subject, Brilliant has you covered. Their easy-to-understand explanations helped me to grasp some complicated subjects that my high school teachers never explained to me in a way that made sense. They have courses in quantitative finance that I highly recommend to all of my viewers. This teaches you everything from fixed income to derivatives, helping you understand how financial analysis works so that you don't get scammed by a ridiculously expensive day trading course that will just lose you more of your money.
Aw, man.
From a former financial professional to you, let me tell you this. Understanding options, Greeks, and futures contracts will put you far ahead of others in understanding finance, and Brilliant helps you do that. No matter if you want to learn from your computer or your phone, Brilliant makes the learning experience fun and easy. To get started for free, go to brilliant.org/howmoneyworks or click the link in the description, and the first 200 of you will get 20% off Brilliant's annual premium subscription. FTX was a crypto exchange platform that also released and promoted its own cryptocurrency, FTT. Both the FTT token and the FTX platform itself were heavily marketed through big budget campaigns involving sports stadiums, traditional celebrities, and finance influencers. A lot of focus was put on the founder and CEO of the company, Sam Bankman-Fried, or SBF. He had marketed himself as a generous billionaire that drove a regular old car and wore daggy clothes, and apparently people thought that was unusual enough to make a big deal about it. Forgetting that most billionaires in the world wear daggy clothes and make a big deal about driving an old car, it really isn't that remarkable. Anyway, behind FTX and the FTT token was Alameda Research, a supposedly quantitative-based hedge fund that would trade cryptocurrencies. As far as analysts can tell now, their quantitative trading strategy was to buy up a bunch of different cryptocurrencies and hope they would shoot up in price.
It's a bold strategy, Cotton. Let's see if it pays off for them.
The person put in charge of managing this hedge fund was the 28-year-old Caroline Ellison, who had just 2 years industry experience working at Jane Street. Ellison famously said in an interview that her trading strategy didn't require much math.
Very little math.
A quantitative hedge fund without math is like McDonald's without the burgers. It just doesn't really make sense. Due to the crash in the prices of most cryptocurrencies in 2022, Alameda Research began losing large amounts of cash, which was replaced with large loans given by FTX using their own tokens as collateral. This is roughly the same as a company using its own stock as collateral for a margin loan, and there is a good reason why businesses are not normally allowed to do this. Its share price will naturally decrease, which undermines the value of the collateral the loan was secured against in the first place. But if you are Sam Bankman-Fried and you control both the lender and the borrower, you don't need to care about business conventions. Eventually, this house of cards came crashing down as FTX's primary competitor Binance raised doubts over the platform's ability to honor withdrawals. A doubt that was very well founded because most of their customer deposits were being used to save the sinking Alameda hedge fund. As of today, FTX is still closed to withdrawals and is starting the process of Chapter 11 bankruptcy, which is a reorganization of the business to try and get creditors their money back. In this case, some of those creditors are people who have deposited money on FTX to trade and are now unable to withdraw. That's the best 2-minute summary I can give, and if you want a more technical explanation, I highly recommend Patrick Boyle's 26-minute analysis. He has real-world experience running an actual hedge fund that hasn't lost billions of dollars, so his insights are truly second to none. One of the biggest issues this collapse highlighted is personal finance influencers and the role they played in promoting FTX to their audience that watched them because they valued their advice. For those who haven't been following the stories too closely, the space is basically divided into two camps, with the influencers who took the sponsorship on one side claiming that if BlackRock and Stephen Curry could fall for FTX, then they should be allowed to as well. On the other side, there are people like CoffeeZilla calling them out for costing their audiences billions of dollars while personally profiting millions of dollars from advertising revenue. I have made it pretty clear in the past that I am not a fan of traditional finance influencers, because it is impossible to give appropriate financial advice to such a broad audience, especially when most of the bigger names in the space have no background in finance. Graham and Meet Kevin are ex-real estate agents. Andre Zick was a magician, and none of this is to gatekeeping talking about finance on the internet. Everybody should have the right to share their opinions. But if you pay close attention, you will notice that more qualified creators like Richard at the Plain Bagel, who is an investment analyst and has a CFA, and Ben Felix, who is a portfolio manager, avoid making financial recommendations because they know they can't do it to an audience of that size without doing more harm than good. This means that their content is less exciting than hearing about how to use the 2023 recession to get rich, or how to safely invest $10,000. And I think the choice to not give wild speculative advice is why their audience is significantly smaller than these more exciting characters. Even incredibly generic advice like investing in a broad market stock portfolio is a terrible move for someone who is close to retirement or living paycheck to paycheck. If you ever consult with a real financial planner, you will see that they spend 90% of their time listening to you about your current financial situation and objectives, and 10% of their time making recommendations. Financial influencers have no way of listening to their millions of subscribers' individual needs, so they spend 100% of their time making recommendations. This whole problem gets so much worse though when these guys start taking paid sponsorships. For better or worse, people look to these influencers because they think they can help them improve their financial situation. So when they start recommending investment products that they were paid to promote, it causes two major problems. The first is that it undermines their credibility. You wouldn't listen to a food critic sponsored by McDonald's, and you shouldn't listen to a finance influencer sponsored by a crypto exchange. It would be very hard for these influencers to say anything bad about crypto in general because they would risk losing sponsorship deals, which by most reports were running $500,000 a year.
That I'm genuinely asking you to forgive me, because I fucked up.
I am not even going to say that I am personally above this temptation. I've been approached by many crypto exchanges offering me way more money than my other sponsors do for an ad spot, and I do need sponsors to keep even this modest channel going, which is why this next point is so important. People like Tom Brady, Steph Curry, and Matt Damon have more leeway to lend their name to finance companies because nobody is paying attention to Tom Brady for his financial advice. That means it's a lot easier to tell when he is being paid money to appear in an ad. The same goes for sports stadiums, and ironically, even the largest financial firm in the world, BlackRock. So far, the biggest defense that financial influencers have presented is that the world's largest asset manager was also an investor in FTX. So if they didn't know, how would anybody know? BlackRock did invest in FTX, and in fact, so did a lot of big names such as Sequoia, Tiger Global, and Thoma Bravo. I am not going to say too much about the quality of due diligence that these investors conducted, but typically speaking, due diligence for these minority equity positions tends to be far less involved than when you're seeking majority equity. Furthermore, BlackRock's venture arm invests into many companies like this, knowing very well that many of these companies fail. Venture capital is a risky business, and it's why VC funds tend to have much larger portfolios than buyout funds. They make many gambles with the hope that a couple do incredibly well, a few more do okay, and the remainder fail. So investing in FTX was by no means an endorsement of its success, but rather a gamble on its future. The personal finance influencers who were stung by this really do deserve the backlash they are receiving, and I hope that it will make them seriously reconsider what advice they give in the future and who they work with as sponsors. I know none of them have offered to compensate any of their viewers out of the piles of money they have made from sponsorship deals, but maybe that's asking too much. So here's something much more reasonable to ask, something that will make sure they are never in a situation like this ever again.
I want to know. Tell me.
Don't accept sponsorships from any company that offers investing products or services. Now, I'm not saying you shouldn't partner with anything money, such as a company that offers your viewers way to save money with coupons, or even an app that helps your users put together a budget. What I am saying is no stock brokerages, no crypto platforms, no trading bots, and nothing where there's an implied assumption that investing your money in X investment can generate Y return. I know sponsors are crucial to running a channel, but there are plenty of great sponsors to work with that have a simple product that doesn't have to sell people on the chance of turning their money into more money. They do offer less lucrative deals, because people are more willing to spend money on things that they think will make them money. But come on guys, you are rich enough, and this would be a great way to show your audience that you have their best interest in mind. I don't think anybody should reasonably advocate for these guys to be completely cancelled over this one incident. But if this becomes a pattern, then it's going to do more damage to their audience and their reputation. Now, if you haven't already seen it, you should probably go and watch the video I did over a year ago on all the other problems with these personal finance personalities. A special thanks again to Brilliant for making it possible for everybody to keep on learning how money works.
What does Matt Damon say on that Bitcoin commercial? Fortune favors the brave! My dad said he listened to Matt Damon and lost all his money. Yes, everyone did! But they were brave in doing so!